Right. I hope that you can hear me well and see me well as well. Can't hear you still. Let me see if the magic of technology is on our side today. Can you speak, please, for me to hear you and see you? Hello?
Yes, hi. We can see you and we can hear you well.
Okay, that's great news. I've been waiting to join at the right time. It seemed that there was some delay on your side. I managed to finish my business here fast to join in this meeting. I'm very grateful for the kind invitation. I followed part of the very interesting discussion, especially issues related to investment, crowding in and crowding out. And I'm at your hand. Tell me if I can start by sharing some updates on the global economy, just to set the context for the Egyptian economy, and perhaps on what I listened to. I may just like to share some reflections on investments and contributions of investment with impact as well, given that sustainability is the name of the game now. If that is okay with you, I can start. All right. Okay. So I'll build on the discussions, and I know that some of these figures were shared earlier, but this is where we are today in terms of growth and their projections by region. It is safe to say that the world this year is going to make it up for what it lost last year. And 5.9 still the official projection for growth, although that this is still under revision, because as we have seen, some countries have been affected more than others by the new variant of corona or COVID-19. And at the same time, we had issues with the supply chain that were not fully factored in the projections, but approximately the world will be at 5.9, 5.8 in this neighborhood. Next year, it's 4.9. This is the expected growth. But the issue here is basically about this great variability and discrepancy between different regions. And as I will show you, some countries managed to do very well. They spent better. They dealt with the health challenge better, and that's why they have this kind of fast recovery. Other countries didn't really do that. They didn't have the capacity, especially in the developing economies regions and the emerging markets in sub-Saharan Africa. And we see some volatility as well among the extractive dependent economies. So the second slide may show more of that. So people have been saying from the very beginning, including myself, about the V, the U, and L-shaped recoveries as possibilities. Well, now we see the three of them in action. If you see those charts, advanced economies will be recovering in a form of a V-shaped, of course, with some variation within them. Emerging markets and developing economies, middle-income countries included, are seeing some sort of a U-shaped recovery. But unfortunately, the less developed economies are going to be seeing an L-shaped. If you put an U and add it to V and L, what will be the shape is going to be, unfortunately, a kind of a K-shaped kind of recovery. More discrepancy, more inequality between countries, and less convergence, I would say, as well, divergence between economies. So this is, and all of that is based on available information from the IMF, either from the World Economic Outlook or from the Fiscal Monitor. Next, please. Then we have the talk of the day, the talk of the week, the talk perhaps of next year is going to be inflation and how we are handling it. Unfortunately, there was a bit of confusion at the beginning about what kind of inflation we're facing, and you may have followed the important debates, including between very well established scholars like Larry Summers and Paul Krugman, whether the inflation is going to be temporary, transitory, persistent. And this is not just an academic definition, with all due respect to academic definitions, especially at the AUC, and I'm an academic myself, but it's basically about the policy implications of this kind of definition that we are putting. And that it is very much said that perhaps the monetary authorities, especially in some advanced economies, should have acted earlier than this. Of course, there is a tricky balance here between growth and inflation, because without really completing the recovery, if you are tightening the inflation fast and hard, that may really compromise the recovery and may not solve as well the problem of inflation as well. So it's basically the art of designing policy making. I think there was a heavy reliance, and I know that the UC, among other academic institutions, are interested in behavioral economics now. I think there was some sort of attempt to manage expectations properly and to anchor expectations at lower inflation rate. And this is very important to do, especially with an institution that has that have credibility in markets. But again, you can see this kind of variability again of inflation. In emerging markets are seeing some sort of an increase as well. Some countries more than others, but the averages are really high. With the latest figures coming a couple of days ago from the United States, approaching almost 6%, 5.8% for the November figures. This is really big by advanced economies standard that have been normally targeting 2%. The problem here is going to be about the policy implications for the developing economies and emerging markets. You may have seen some updates from the Institute of International Finance telling us that for the first time since March 2020, we have seen capital flows to emerging markets turning negative. I hope that this may not continue, just testing the market, encouraging perhaps better terms for capital flows to go back again to the emerging markets and developing economies. Cost of borrowing is going to be higher as well. Next, please. So this is the background. So let's see how Egypt is performing. As we can see, Egypt was among the very few countries that managed to have positive growth last year, and continue to do so this year. 3.6% last fiscal year, 3.3 for 2019-2020 it was 3.6. The year ending in June 21 is 3.3. For the current fiscal year for Egypt, the projection is around 5.4. I'll come back to that because there is some sort of, again, variations in projections based on whom you are asking. Inflation is within the Central Bank of Egypt target. As you know, the target of the Central Bank is 7% plus or minus 2, so it is within target. Overall fiscal balance have been improving thanks to the economic reforms of 2016 and still being maintained despite the heavier demands on the treasury and the purse of the state. Public debt, as you may have heard earlier, that is coming really under good control because of the economic reform. Then it had to increase because of COVID. It is following the trajectory as the IMF representative in Egypt mentioned earlier today. So with the control of budget deficit, maintaining primary surplus, improving the capacity on the tax department and public revenue, and enhancing growth. This is very important. The public debt ratios are projected to improve, but we, as you can see, are putting many caveats here or many prerequisites that are going to be attainable and feasible because the country managed to do them well. Though that the economic environment is not really as benign, that means more coordination is required between the fiscal policymakers and the monetary authority. Next, please. Yes. Here, the growth and inflation projections. So last year, everybody, or year 2021, this is the fiscal year. It's a bit confusing, as you know, with the fiscal year of Egypt ending in June. So it has half and half of the calendar year. So 3.3% 2021, 2022. You can see the variation. Here you see the IMF 5.4, 5.3 for the Economist Intelligence Unit, and the green one is the World Bank, lower than both. But who really knows? We need really to reach that point, but these are basically the projections. Then for inflation, again, within the ranges of the central bank, 6.1, 7%, 7.5. As far as you are in the 7% plus or minus 2, you are within the central bank target. Of course, advanced economies are different from developing economies and emerging markets when it comes to inflation. Advanced economies, 2%, 3% is basically a kind of a level or an inflation rate that they need to maintain matters at. For economies like us, because of structural rigidities, institutional issues, and matters related as well to imported inflation, you would say, as far as you are in single digit and pushing it down, that's good for price stability. And then you have the adequate compensation from the interest rates to maintain a real interest rate to be positive. Next, please. Right, this is just confirming what was mentioned before about the capacity of the economy and its good policy making during the last few years to bring the CPI changes to control, and you have seen those spikes and high rates of inflation that even exceeded 30%. After 2016, but now you see that this is coming under management, under control, and I'll show you an interesting figure in a minute on that. Inflation interest rates are there as well, and to show that more or less you have a positive real interest rate especially for the long-term depositors. Next, please. Yeah, this is the interesting chart that I wanted to share with you. Normally, you wouldn't do that. If you are a developing economy or an emerging market, you normally need to compare with your fellow developing economies and emerging markets. But here, given the development that had been happening during the last few months, you can compare inflation rate in Egypt with the EU and the US. Egypt is on the green side. The US have been increasing their. The European Union is at that level, lower still than Egypt. Of course, this is a kind of a snapshot. This is not the annual average. I would say that Egypt had done well in bringing inflation under control. Inflation had increased in the US. That's why you have seen this kind of interesting chart here. The inflation that you see in some of the advanced economies, they haven't seen since 1982. Here, this has implications as well. It gives more flexibility to the monetary policy maker to conduct the monetary and exchange rate arrangements where you don't really have this kind of inflationary pressures. And I'm picking the EU and the US given their significance as trade partners, and they followed the discussions on trade, and I'll come back to that in a minute. Next, please. I'm happy that my good examples of Vietnam are being picked, Vietnam, of course, is popular beyond what I promote. But one thing here is basically accumulation. One of the few things that the traditional classical schools of thought and even the Marxist schools of economic thought would agree on, basically accumulation over time. Without accumulation, you are not going anywhere. You can really see this kind of steady state kind of progress that you see in the Asian economies, Japan before, Cambodia and Vietnam here, China, Korea, Singapore. These countries managed to accumulate investments, progress in growth over time. Of course, there could be accidents in the road, but they are continuing. They are marching on. That is reflected here in the GDP per capita. You can see, compare Egypt with Vietnam, it had been higher, and then you can really see Vietnam getting close, even surpassing Egypt back in 2017, 2018. But now, and you see Cambodia is coming as well, progressively nice. You can really have other examples, including from the Philippines. Next, please. Exports and imports. The issue in Egypt is not a problem of imports as such, especially if you see the composition of imports that are mainly from raw material, intermediate goods. I know that from some time to time people talk about some luxury goods. They are there, but not really that significant. The significant components of our imports in Egypt: raw material, intermediate goods, and inputs for industries and essential goods, especially after the adjustments of the exchange rate in 2016. And if you compare Egypt to Vietnam or Cambodia, you can really see that one of them is almost more than double Egypt, and the other one is like 4 times Egypt in terms of imports of goods and services. Our issue, as mentioned before, it's the exports of goods and services, and this is not new. It has been there with us for quite some time. The averages of, I think the best we reach here could be in a couple of years in 2006, 2007. But again, at any stage, we're lower than these countries. The 100 billion is easy to achieve from a macroeconomic perspective, because if you consider Cambodia, for instance, 16 million people, they export $16 billion of goods. So this gives you an average of 1,000 or 1,000 per capita exports. If you take the of that as a reference, 1,000, in the case of Egypt, we should be exporting more than 100 billion as targeted by the presidency in Egypt. So in terms of the macroeconomic and balance of payments perspective to matters here, this is very much achievable. How to achieve that is an industrial case. It's an industrial policy. It's an exports policy. It's agriculture. It's the way that you manage matters at the sectoral level, institutional issues, and matters that need really to be solved with. Some of them are in the infrastructure and but many in the soft policies as well that need to be changed. Next, please. So how is Egypt doing well in maintaining the macroeconomy despite the low performance in exports during the years? And as I said, it's not new. You can really see tourism in some years did well. And the remittances of Egyptians working abroad have been very much resilient, including in times of shocks and challenges. FDI could do definitely much better than what we have today. And I listened to the discussions earlier, but let me put the issue on FDI doesn't come on its own. FDI comes when the whole investment environment welcomes the investment promotion and the role of investment, actually public and private. It's not really the old school. It's like Ahli or Zamalek. It doesn't work like that. I'll show you something here that can really prove my point. And I might disagree really with many of what has been said so far. It's not about crowding in and crowding out in that simplistic way. So let's go to that. Perhaps, yes, here we go. Yeah, this one. Thank you. So you can really see the world median is much higher for total investment as a percentage of GDP. Of course, this means that many countries are doing much better than that. So I would say the world median could be close to 25%. The average total investment to GDP in Egypt is around 20%. If you take the figures from 1980 until yesterday. The actual figures, please don't look at any figure beyond 2019. This curve is just being projected by different institutions, including the World Bank. It may happen, it may not. If it happens in 2022, 2021, this means that we are going back to average. But we need to go back to those levels that we had more investments to GDP than what we have. Investments mean public and private, not just private and not just public. And of course, the FDI. The question is not about crowding in and crowding out. I'm happy to come back to that. It's a very controversial issue, I know. It's we need to be very pragmatic about how we see things. The better question is, does Egypt has the adequate, critical, total investment as a percentage of GDP of all sources or not? I'm saying, no, not yet. We need to have more public and more private. So the better question is basically where such investment should be happening. Being within an academic institution, I'd like to refer to a couple of studies, including lots of work by Professor Mariana Mazzucato, including a piece that I'm referring to now, is called Neither Crowding In Nor Out. There is a role for public direct investment to mobilize private investment in some particular sector. So it's the question here is a sector specific, firm specific, location specific. It's not really across the board. Macroeconomists like myself would really go and say, like others, well, crowding out concept is basically when you are relying on the treasury to do more, and you finance investments through debt instruments. This is true, but actually a better answer could really come from where exactly the investments are located, to where exactly the investments are located. Interestingly, I refer as well not just to Professor Mazzucato's work. It's a joint paper by her and others, but a piece by the Fiscal Affairs Department of the IMF, Public Investment for the Recovery, that was presented recently by Paulo Mauro, is saying that investments by the public, government, but public sector of government, can enhance the multiplier effect in times of distress. And he gives examples of investment that strengthen confidence, especially in periods of high uncertainty. So the question, as I said here, where to put the money and at what time? Are you in period of high uncertainty like the one that we have today? Yes. So we need public investment. Where to put it is basically the big question here. Baseline, when you are back to normal, you leave matters where they should. Here, it's basically the kind of design of policies. It is not crowding out and not crowding in. From a macro perspective, you need to go sector specific and project specific. Now, our country is going to be the host of COP27. Let me tell you an example coming from low carbon energy supply. And I'm happy that some of the leaders of the energy sector and electricity were in the panel discussing their work in Egypt and in Africa. The rapid structural change towards low carbon, and I quote here again Mazzucato, rapid structural change toward a low carbon energy supply requires significant additional investments into where? Not to compete with what the private sector can do, but into innovation, into areas that could really have more demands on technologies. So mobilizing greater private investments will require applying more investments in the public sector. The whole thing about the multiplier that was mentioned again by Mr. Mauro from the fund is basically about where are you putting the money? And here I think he's putting, I'm getting that from a recent publication, presentation. He says, well, invest right now in maintenance. First thing, maintain what you have. This is not really bad to maintain your infrastructure. It will employ people and protect the assets that you have been building during the years. Review and restart good projects. Good here, put many lines under the good. Speed up the pipeline and plan now for the new priorities. Actually, I'm not seeing these kind of investments are not just good for growth and creation of jobs, which we need, but this could be again in the developing economy that will not solve the problems of inflation and high prices by merely getting the monetary authority to do its magic. This can happen only in the advanced economies when you can really get the Fed or the Bank of England do this kind of work, but or the ECB or the Bank of Japan. But in the case of our economy as an emerging economy, you need really to have many things: monetary and fiscal policy coordination. You need to strengthen the safety net and social protection, and you need at the same time invest heavily where it matters to create jobs, to enhance productivity, and to get this kind of mismatch between demand and supply of goods fixed. I spent a lot of time on this particular slide because I know it's very important to deal with it. Super fast, put that please in a context. It's not about the transactions. It is not about the transactions. I'm saying that again, it is not about the transactions. Transactions within policy, within an aim, within objectives. You need to achieve the SDGs. You need to lower poverty, enhance education and health services. You need to invest in quality infrastructure, including digitalization. You need to give all the attention to equality, gender equality, SDG 5, or overall equality of income and opportunities, SDG 10. And you need to take care of the environment, SDG 13, and biodiversity, SDG 14 and 15. And we need to do all of that with transparency, with rule of law, and with good partnership, local and international partnership. This is the story. And where are we? You can really see the arrows based on some recent report by SDSN that tells us that we are doing okay. There are many greens and there are few reds. Of course, the issues related to poverty will benefit a lot from what I'm going to say now. Next, please. Yeah, and this is Egypt in the same report telling us that we are ranking 82 among 165 countries. We are doing very well in some indicators, but we need to do more in others. Some good progress. We still have 10 years. I think we need to accelerate and speed up what we are doing. And I have my biggest bet with big optimism in the most important project that is being undertaken in Egypt, which is basically the localization of SDGs through a Decent Life project or Haya Karimat. You may have heard me talking about that before, but next slide, please. This is Egypt compared to our neighborhood in the Middle East and North Africa. You can see that Egypt doing better than our neighborhood in many aspects, and it needs to improve more, especially in issues related to inequality here. And continue doing well in other matters as well. It's an issue of accumulation and progress. Next, please. With the preparation of climate change, I encourage the AUC, please. That could be the second proposal. The first proposal is to do some serious study on crowding in and crowding out, as Mazzucato did it in countries, in sectors and firms. Come from the aggregate level into the micro-specific, you will see wonderful policy recommendations coming from that. And again, the second area of work, Egypt is hosting COP27. Lots of work is required, especially by research centers, in understanding better what's happening in sustainability at large, investing in adaptation, investing in mitigation, managing the transition, dealing with the loss assets, and the damages that happened because of climate change. I think you can really have a contribution. But in whatever you do, please don't do like some of the advanced economies do, and they are putting themselves and others in trouble by making the SDG 13 the only game in town. No, it's not one issue. It's not just climate. You need to manage the transition. If you need to manage the transition, you need really to put it within the context of SDGs at large, because while you need to protect the planet, you need to protect the people, their jobs, and to create more opportunities and to deal with poverty. Otherwise, we are heading to a disaster. You know, those countries that really phased themselves out super fast without managing the transition in some lines of sources of energy, were in trouble just a few weeks ago in securing their energy supply, and their energy mix had unprecedented increase since the oil crisis of 1974 and 1979. And even some of them reopened their coal mines and to generate electricity from one of the worst sources of energy, coal, when it comes to emission. Next, please. So we need to manage the transition. And here, this is my last slide, but definitely not least. This is my favorite initiative of all that have been. I know our country has been really with many initiatives in infrastructure, in health, in new cities, in dealing with the slums and the informal dwellings, many important in energy. But this one is really the hope of Egypt, especially for business, talking to the business school. Because when you do these kind of investments in affecting 60% of the population, in 20 governorates, in close to 4,585 villages, with 28,000 smaller villages affiliated with them at Tawaba, you can really just say, well, we are going to be investing in infrastructure, in education and health. But just imagine the dynamics of such investments. And if you are putting more investments, thanks to some recent work as well of Sharif Kamel, who is really telling us about the merits of investing in technology and digitalization, a very nice piece that I encourage you to have a look at. Again, you're just unleashing the potential. How many Mahmoud al-Arabi can really come out from this if he didn't really have all of these facilities when he was just trading with some piastres and pounds until he built his empire as one of the great examples of entrepreneurship and being self-dependent, or Asami. Yeah, how many people you can really expect after such investments in education and health, in access, in opportunities? That's why in the short term, midterm, I admire this initiative, because it's going to accelerate our achievement of the 2030 agenda. But in the midterm and long term, it's going to be helping generations of Egyptians with creativity, but they need guidance, they need mentoring. And without exaggeration, I said it in the back in 2018, I think, when I was invited to give the a speech in honor of the graduates of, I think, the class of 2018. I think I said that we need an AUC at least in each governorate in Egypt. If you take this kind of comparison with Korea or with the US, this is not really a tough demand to have. 27 AUCs or 26 plus 1, that would be great. And we need to have more of that. Investments in innovation, in education, and unleashing the potential. Here you can really get not just some transactions, but basically steady growth and bigger investments and exports. Having said that, I took more than what I planned, but I was trying to answer some questions in advance. I'm sorry, I have 2 screens. Let me see how it works here. All right. Okay.
Okay, thank you very much, Dr. Mahmoud. We really appreciate your time and we really appreciate the information that you shared with everyone. Let me actually end this session with a few words that Dr. Mahmoud has shared with us, where the right mix of policies and addressing institutional challenges can help improve the investment environment. So the real question is where to invest. So you need to invest where it has an impact, invest heavily where it creates jobs and enhances productivity. So unfortunately, given time constraints, we will not be able to receive questions for this session. We have time? Well, actually, we received some questions from the audience, so let me share them with you. So the first question, where is the stock market from Egypt Vision 2030? So the Egypt stock market is one of the worst in 21. So where do you see the Egyptian stock market in the Egypt Vision 2030?
Well, I saw it in the strategy, the Vision 2030. There is a role of portfolio investment. There is a role of the stock market and encouraging more public listing. And here, public listing is not just expecting more from what's so-called now Barnamij al-Turuhat, but basically from more private sector, especially the family-owned, the companies with track record to get listed. One of the things to see is basically, I may upset some people because the issue of the mirror here, the stock market as a mirror of the economy, you need really to have first the stock market to be fully representative of the economy to call it a mirror. It's not. We have many sectors almost absent from the market, so from the stock market. So we need to encourage more listing from different areas, especially the corporatized agricultural food sector, lots of manufacturing, especially in governance. I know from the leadership of the stock exchange, they have these kind of attempts to encourage not just on the demand side by having more investors, but you need bida'ah, you need commodities, you need assets in the market. In the time that there was increased share of the total investment to GDP, the contribution of portfolio investment, including, of course, the foreign investments here, foreign and Arab, had been very much decent, bringing at least 1 to 1.5 billion a year net. And I think the capacity now is to do more, given that the country has invested more in the infrastructure. And now, as we have heard, that there are more intentions to get the business sector in partnerships. So you can really see the variety here of the of potential products in the market, in addition to keeping and protecting what we have. Having one single indicator like market cap to GDP may not be very much helpful now, given it's very much low. But again, more listing and more support to the market, and to reflect this kind of claimed support to the business sector may encourage more contribution to of the stock exchange in the business in business development at large. So as far as the SDG framework, the 2030 agenda is concerned, there is a very important role for business sector, including the business sector listed in the stock market, and it could be a good way as well of showing the impact and the social responsibility, given that there is an old index in Egypt as well demonstrating such importance. But it requires more effort and more coordination and firm policies with full clarity. Business and stock markets do not work based on history. They work on the present with a forward-looking approach. So we need really to share this message and encourage more listing. And we need really to see the substantive incentives for the business sector to do that, beyond tax incentives.
Okay, thank you. There's another question that is actually looking for your comment on. So you've been speaking about investment where it really makes an impact and creates jobs. But job creation in Egypt is still dominated by the construction sector, and there is a limited vision for industry and manufacturing, which is really constraining inclusive growth for Egypt. So what is your comment on that?
Well, I think it could be just an observation of recent investments, but you take the contribution of the business sector based on the figures coming from CAPNAS. It comes from different sectors. The different sectors. Still, the agricultural sector in Egypt is a very significant employer. The services sector at large of great importance. And then the investments that you can see in the real estate and the construction sector have been very helpful, really, in times of recession and return of migrants from abroad. What you need really to put is basically not to put a cap on a growing sector. Let the growing sector grow as much as it can. Push it further, support it further. The thing here is basically how to support the sector that need more investment. The export-oriented ones, the ones that create jobs, the ones that have opportunities for investments, especially in research and development, in innovation. We see great examples, especially not very far from where you sit. I'm always impressed with the young caliber and innovative brains and great minds hosted in places like Greek campus, not far from where you are, people investing and innovating with very limited capacity for some of them, but with great ideas and some good support. What we need here really, given that we invested in such infrastructure, is to accumulate and build on that and push the sector that can really be doing better in the future, including manufacturing, and to have a good position in that famous supply chain and exploit the location. And we can see really the potential in some of the regions within Egypt, including the new zones, not just the economic zones in the Gulf, but the new investment zones in the heavily populated areas, like what we see in Menofia, in Banha, in Midghamr. All of these new investment zones could really be with good connection to the rest of the industry, with a good coherent policy. You need the policy to do that. Again, it's beyond transactions. My message is simple. Do not please put a cap on a sector that is growing and employing people. We need really to give opportunities to others who are not really doing what they can. It's not just a philosophical kind of a position, because this has policy implications. Resources are there under competition. And then that gets me into an interesting area, because I was among those who were behind the creation of the concepts of CSR in Egypt through a center that is was affiliated then with the Ministry of Investment, and then I think now it is with the Financial Regulatory Authority. I like what I heard about the issue of impact and about including the values of E and S and G, with perhaps today bigger emphasis on the S, the social aspect. That again, it is not really something better than the other. CSR needs to be internalized in the investments. So now we talk about impact, and there are some complicated businesses now with accounting standards to account for such impact, because everybody can say, well, I have an impact, but they need really to have a yardstick, a benchmark. And then in philanthropy, philanthropy and philanthropists have a very important role, including actually at the EUC. When you see all of these donations and contributions, these are coming from philanthropists. So again, please encourage every channel of idea, of finance, of investment to do its role. I beg to differ as well. I don't like to be controversial. The Milton Friedman was not that wrong. I heard an intervention about that. Milton Friedman, when he said that the main line of responsibility of business is to grow and create jobs and to make profits. That's basically the bread and butter and the start and the merits and the raison d'etre of business. If you are not making profits, if you are not creating jobs, if you're not growing, you will disappear and you will not make any kind of contribution. So don't really like to get into this. You need to establish the business right, corporatize it better, put it within corporate governance, internalize the new thing here. CSR and impact are not just a nice department, not reporting to anyone just to make some sort of public relation. Now, the CSR, ESG, and impact are becoming part of the corporate structure in firms and reporting directly either to the board or to the CEO. So this is the difference. Please encourage the philanthropists to do more, to build more halls like the one that we see at the EUC and more recently at Cairo University. Charity is not bad. Encourage that. It is in our culture. It's in our religion. Use it. And there is even a tax incentive for doing it. Check the tax code if you are paying taxes, as you should. You will find that the country as well is encouraging this. Meanwhile, internalize CSR and put it fully within a measurable yardstick and benchmark in the business and report properly on it based on the ESG. ESG for firms is like SDGs for countries.
Thank you very much. We have one final question, and it's actually building up on discussions we had today, speaking of the gradual exit of the SOEs from the economy. So someone is asking, public IPOs have been very delayed. Other countries in the region have already proceeded with their IPOs. So what's your take on that?
Well, I think there are different schools of thought when it comes to that. Let me just first distinguish between three things. I said public investment is essential in some areas, in some sectors. Without it, the private sector cannot do it. The multiplier effect is very well established. I encourage, as I said, EUC to do more research applied, and others, actually, other researchers and other academics, and perhaps in association with the relevant ministries of planning and industry and others. Having said that, there are varieties here of state intervention. Could be coming from the old SOEs, and here they have their own limited contribution to the economy with few exceptions. Some of these companies, and I had the honor in supervising many of them for many years, some of them really are doing a very fantastic job, despite the constraints. And they responded to reforms. The sugar company, for instance, of Egypt, a state-owned enterprise, did fantastically well when we cleared their arrears and made them do a good job based on business rules and business engagements and good competition as well, because this sector was subject to the competition from alternatives and from imported goods. Many of the companies, including container handling companies, the aluminium factory of Egypt, when we invested in it and dealt with many of the constraints, they responded. There are other companies didn't. So here is basically how to make these companies profitable and treat them based on the business conduct and ways of handling them. Some of the other companies shouldn't really be with the states because they are subject to this kind of tough competition. The private sector is done much, much better than them. In Egypt, beyond Egypt, there is no way really to compete in areas that the private sector can really be more competitive, more agile, innovating better, not really with the same constraints of the public sector. So you need really here, again, this is another example of picking and choosing. And then there is the huge, bigger investments now that you see in infrastructure, in energy. This is, again, an area that will provide support to the private sector. And I see the rising voices related to crowding out and crowding in. It's a good sign that now there is an opportunity to give me a share of this cake. Now, what I'm saying, let this cake grow, let all kinds of investments grow based on rules of competition, based on rules of competitiveness. And here, the old dichotomies and constraints of knowledge about what's crowding in, what's crowding out, again, be evidence-based, go to the sector, go to the firm, and see exactly where the state should be going solely in one of the areas, where the private sector should be left alone without constraints in flourishing and booming and doing a good job, and where are the areas that should be subject to effective, flexible, public-private partnership with decent return and big impact. 3 areas, traffic lights, we need to see that happening soon.
Okay, I hope your time allows for one last question from the audience.
Okay, we started with 0 questions and now I see them coming, flowing high, all right? Good that you still have energy, all right?
It's saying, why do we not see the benefits of growth reflecting or trickling down to the lower income groups? And how can this be reversed or tackled?
Well, the trickle-down effect doesn't really work at all. Not in Egypt, not in the US, not in any country. Professor Galbraith mentioned it in many years ago, and I put it when I was even in government, when I quoted him when he said, it is less than elegant metaphor when you are feeding the sparrows or the birds, the horse will be fed of the leftovers. People are not horses, or actually, he meant to feed the horse so the birds will be fed on the leftovers. That doesn't really deal with economies. The way to do it, the best trickle-down effect will happen with this decent life project. When you are opening access, when you're investing in infrastructure, when you're investing in human capital infrastructure, including a broadband. I was very encouraged with what the Minister of Communication told me when I saw him in Egypt last month, when he said that digitalization and broadbands in the villages and the small towns in the governorates, where I come from, I have bias to rural Egypt, I'm coming from Kafr Shukr. This is going to be great. This is going to be, I'm just betting on the dynamics of that. That will not just be trickle down. That will be a country that is dynamic, that is growing fast, that is accumulating in what it had been investing in from the macroeconomic stability of 2016 that we had its results shown, to the huge investments in infrastructure and development and renewable energy. I'm happy to, when I see the map of renewable energy and I see my country bright on the map, hosting one of the best projects and growing with partnership between the public sector and the private sector. This is a good example of partnership. The other projects in Gulf of Suez area and Za'afaran, and another example. of public investment. But coming back to the issues of trickle down, go to the smallest village. You are reaching out those smallest villages today with bigger investments in their infrastructure, with education, with health, with access to the internet, with access to the markets, with access to knowledge and ideas. And then you do that as well, compatible with the rules of engagement of SDGs and resilience. Give this bright population of Egypt the chance, and you will not find anybody waiting for a trickle down. You will find this kind of growth inclusive enough to be bottom up, not just top down.
Great. Thank you very much, Dr. Mahmoud, for your time. We really appreciate you taking the time to answer all the questions we had from the audience. So thank you all very much for attending and for participating with the very interesting and rich questions to create this discussion. Thank you very much.
Thank you. All the best.
Thank you, Dr. Mahmoud, for such a conclusive and holistic overview of Egypt's economic performance and its progress towards achieving the SDGs, United Nations SDGs, as usual, providing an objective and yet realistic overview. This concludes our event. I would like to recognize and thank the External Relations team of AC School of Business for all their hard work in organizing this event. I'd like also to thank and acknowledge our media partners, Cult Art, EG Web, and Telltailers. And thank you to our content partner, Decode, always a great support. I would also like to thank our partners, iScore, Arab African Trade Bridges Program, the Coca-Cola Company, and CIB, Commercial International Bank. And the greatest thanks goes to our physical and virtual guests. Thank you for your participation, and we look forward to welcoming you in future events and around the same time next year in our 5th edition of Business Forward annual event, hopefully without masks and without social distancing. Thank you very much. There is a reception dinner served at the Fountain area. We'd love to see you there. Thank you.
Thank you. I'll have a virtual access to this reception, but perhaps when I come back next time, for real. All right, so we'll leave.